Morning, it's Vince Lanci, January 31st, end of the month. And what an exciting day yesterday. I know I sound a little bit like a salesman, but it really was exciting. I don't care how dry you want to describe it, but on gold here, we were ready. We were ready for Sunil and myself, I should say, as well as others. We're ready for, why don't we put it up here before we go through all the other ancillary stuff. But again, working with spot gold, right? We were ready. We were looking at a situation on daily. Let me hide all this technical stuff here. It's really just a hobby. We were ready for a new high that turned to a red candle and gave us a non-confirmation on the RSI. A very exciting moment. But those plans don't always happen. And as Sunil and I know, you have to be prepared going into an event. Although Sunil did end up selling the 13/20/30 call spread yesterday at $3, and it isn't working, his risk is defined. He can sleep at night. The most he's going to lose is 7. The most he's going to make is 3. So, well, the most he's going to lose is 10. The most he's going to make is 3. So, he put on a 3. The odds are different than the payoff or the payout. So, 3 to 10 is the I forget which is which now. It's been so long. But basically, net, he took in 3 and he can pay out 10. So at the worst, he's going to lose 7. This is, I'm not using him as a negative example. This is a positive example because I don't know how many days he has left on it. Maybe he's got a day or two, and he doesn't have to answer. This does apply. Gold hates the teens. Sorry, but it just continues to happen over and over again. This time it didn't reject it. It went just right through it, scooted right through it. So I get a feeling, again, a handicap, not a prediction, but if gold hits the teens again, that spread could be worthless in a heartbeat. It's hard to say that after what happened yesterday and where we're opening today, but understand that gold is overbought and markets can continue to be overbought. Believe me, I'm the most bullish person there is on gold for fundamental macro reasons. Well, it's hard to translate that into active trading. But let's take a look at why again options were the way to go with this. As educated, as reminded by friends of mine. When I got a daily buy signal, I bought. I took some money out and I stopped myself out. I got back in. You should have just been long. This should have been your first stop. You should have just been long. This is spot gold now. No chance of being stopped out. No chance of being stopped out. No chance of being stopped out. The proper way to play this, as taught to me by Lucky or Michael Caricato, famous options trader who was a technician. He used to chart options values and come to me and say share his technical analysis and educate me on how Linda Raschke traded. And then I developed this concept with him, and he basically said to me after I developed it, he said, "Okay, your stop should be where you say it is," which is right. He goes, I go, "But when do I get out?" And he's like, "Well, set a goal 2 to 1." And I set that goal 2 to 1, and I would get out, and I'd say, "You know what? Gold and silver stink. I'm right 30% of the time. I get stopped out and then the market moves because of the noise." He goes, "Well, why don't you start trailing profits?" And the proper way to do this with futures is you get long here. After day 1, if you're in the money, you raise your stop to 12.98. After day 2, you raise your stop to 13.0180. Now, clearly you touch these prices and you keep trailing your stop higher, depending on your risk tolerance, locking in. That's just too complex and high maintenance for me. So what I've done when I do it correctly, and you see on Optrader, thanks, Sunil, expires tomorrow. So wait a minute, expires on Saturday? I hope you mean Monday. If it expires Saturday, it's going to be a rough weekend for you, my friends. The concept, the education on using momentum systems like this that I, tweaked to my preference was I want this to be systematic and I want it to be low maintenance. So you get in, you establish your first stop. when you reach a goal, maybe it's one of one, maybe it's something, a level that you know technically, you end up, I end up, when I do it properly, when you see it do it properly, I'll trail my stop to my entry point. And then basically I'm stopped out at flat. This risks, of course, being stopped out and then the market continuing higher. But when I get stopped out at unchanged, I look at the opportunity to get back in. And that's actually what I did. But overall, that's the best way for me to manage with futures. I hate trading futures, but I've had to learn, because as a market maker, it was very hard for me to take markets because I know what's on the other side of that. Anyway, sticking with the market itself. Okay, if you look at the market, people will say the market is called, infinity higher today. It is, if you're looking again at the COMEX settlement, which is at 1 o'clock, and that's the basis of your statement. But the market, the over-the-counter market, closes at 5 o'clock. That's when the cash market closes, and that's when Globex closes. And that's what your technical should be based on if you're a global trader. And I have to do that with my system because I can't shortchange the amount of hours in my system for volatility. Now, to translate this to April, which is the laid chart, and the active month, I want to stay on this because if you look at what happened yesterday, right, we were hovering. Maybe I should go with the hourly, right? Going with the hourly, we were hovering. So we had the spike that was at 2 p.m. So here's the Fed, right? Here's the Fed. It goes from, right, we're hovering in the teens, right? We go up to 1320 and back down, right? So basically we orderly. So this is not a classic rejection of the teens, but I'll tell you, if you want to look at it on a, however, whatever term you look on it, you can rationalize your position. The market just marched right through the teens. Not much sideways movement there. This, by the way, and a hat tip to Larry and my own research, this smells of algorithm buying. When you see 45 degree, smells of algorithm. I don't think the algos make a lot of money in gold. It's just not deep enough for them. I've seen them lose money overnight. This also smells of algorithmic buying. But here we are above the 20s, trading 28. My hope, and by the way, going back to the weekly, notice this. On the weekly, right, I got a buy signal on the weekly here in spot. I would have been stopped out on futures. So why don't we look at spot? I got a buy. I would not have been stopped out on spot. In fact, I wasn't stopped out. Very close, very freaking close, but not. And I took profits in this area here. Obviously, I should have trailed stops once again, but I just, you can't believe that the market's going to get back to where it was, especially with all the Venezuelan stuff going on. So I started day trading in here, and you guys saw wins and losses, a couple sales that lost money, one sale that made money, 4 buys, 3 that made money, 1 that lost money. I'm harping on this because you don't get much opportunity to talk about Oh, there you go. Sunil, thank you for the calendar expiration there. Tomorrow is Friday. You can see by my clock at the bottom that in my world it's 7:09. So I'm somewhere in the mid-Atlantic on the wrong day of the week. Thanks, Sunil. So there's hope because, as we know, Friday is Friday Follies, for lack of a profanity term. But so I want to pivot back to that structure in a second, in a minute, I should say. But gold's looking good, right? Okay, so let's go back to the daily, right? We're looking at daily spot again. Nothing exciting to see here. You just have trend. So my systems work is done. It may give me a regression trade that I'm really not that confident in, but what I would like to see in sympathy, not sympathy, but in team spirit with Sunil, is I would love to see a new high, right, like we have now, that closes red on a daily at, say, 1 o'clock, and then when the market thins out and the algos and the stompers come in, this market start to go red. And there's the hope, right, that this market can have a nice big rejection before going higher. Uh, uh, Again, I don't want to try and call tops in this, but if you're long, you should be getting out. So why don't we go to technical levels, because that's not my forte, but it certainly is relevant. Now, my excellent drawing there, if you can make that out, 4.60. That's the EFP, meaning that's the spread from cash to the April future. If you don't know that and you want to turn off this broadcast because you want to hear what the April future levels are, well, tough. Because if you understand equities, you understand indices, you understand things like fair value and delayed staggered closings, then you got to understand this stuff. Gold is not a U.S. product anymore. Gold is a global product. We are net sellers of gold. The East is net buyers of gold. Know where spot is. You want to have a conversation with someone in London? They don't care about America. Grow up. That's actually a comment to myself. But Michael Moore's technical analysis is U.S. based. I have something more to say about him later on. So here's his levels in April. If you look at my spot levels and you add 460, you should get April. And that changes from day to day. So in the highlighted area, look for possible exhaustion in the 1328.60 area. Okay, wait. Let's get April up for his sake. All right. So we have apples to apples. We have delayed apples to apples. Right. Look for possible exhaustion at 1328.60 area. That's kind of cool, because if he is right, Sunil's trade has a chance, and we are kind of floating around in there on the way up. Sell against 1336.70. That's close to a number I have. I have a number on a monthly spot chart, not April, that says we can get to 1340 before this move is over. So 1336 to 1340, give or take. All right. On the downside, he says buy against 1315 and a half. So your range for the day, right? And again, he uses the COMEX close. So he's looking at a settlement of, I don't know, where did it close? 1315, 1314. I have no idea because I don't even look at it anymore. My ignorance is willful. So he's basically saying, looking at the COMEX close, buy against 1315 and a half. And your initial range is 1315 and a half to 1328. Pretty wide, $12 range, considering his average daily range number, which is also a top secret tool that only his clients know how to use. I didn't even learn how to use it until last week, is $9.50. So we are at the edge of his range here. So I guess from his point of view, above 1328.60, you might have a little bit more of a run up to 1336. So I'm looking, and I'm not looking hard because gold's done its work for me. I'm looking for gold to fail in this technical area, which would also probably on the hourly VBS system give me a negation of the momentum higher, and then look to sell weakness. I am also a person who trades regression to the mean. Unfortunately, it's always been to take profits, never to initiate trades. But I don't like to pick tops, but I do like to sell into weakness. So I may do that. I'm not sure, but it would be a punt. It wouldn't be something very high probability. So I leave you with this. Gold and silver are in commitment to traders will probably show this. Gold and silver are adding to longs as the market goes up now. This is not shorts covering. I'm almost positive. This is people adding to longs. This is fresh money. The question is it deep pockets or is it momentum people? And I think it's a mix of that. And if you look at this area here, right, I talked extensively about this being weak hands to strong hands. And my point was this is, in the past, weak hands were getting long from strong hands as they sold. So Gunlock, we'll just use him. Gunlock buys, Gunlock sells, momentum guys buy, weak shorts are covering, and then commercials are selling, and the market dipped. And I thought, I'm a genius. But news comes out, we reject the area, and I still think it's weekends that are long. Doesn't mean you don't have fresh money coming in. One weekend you can stop out, but if you're a bullion bank, you can't stop out 500 weekends. You let them exhaust themselves. And I'm not calling for reversal. I'm just saying the risk is not there for me to be long as an active trader. The risk is there for me to be flat and for me to be long, looking at cash. See, this was a signal to get out of a short. I didn't do anything. I had nothing on. Conventional wisdom says you go from one end to the other. And we're pretty much there. So on spot, 1332 and change. Add 1332, add 460, 1335, 1336. Lines up with Michael's numbers. Now, that could be coincidence. We're not sure. But I want to, please stay with me on this because there's a couple other things I like to discuss in passing and one important concept. Okay, there's the red line of the Fed. Okay, that is my son's logo. Love the kid. He's a coder and he kept telling me, actually for a couple of years, he told me I should start my own YouTube channel and teach options. And I said, really? I'm probably better off discussing Clash of Clans, a video game I play. And he's like, Clash of Clans stinks, play Clash Royale. Anyway, moving on. Okay, not on goal, but I want you to note this. If you are reading about Facebook, most of the people that listen to this must trade equities. If you're saying, how does Facebook hook its books on active users? Read that. Follow that guy, Downtown Josh Brown. Yeah, he is on TV, but he's kept his integrity. Read that. I'm not going to read it. Someone asks a question, he gives an answer. Occasional snark, but he knows what he's talking about. This is a trader who knows how to manage risk, who's successfully taken his intellectual capital and put it in a broadcast world. Okay, Facebook lies, and I'll add to this. Facebook's in the process of consolidating all their apps like WhatsApp and their Messenger. And what that does is the consolidation of the client list on that actually obfuscates further how many clients they have. It's like papering over the problem. So here's a little bit of information here. This interested me, although I really don't know how to interpret it yet. This is a bubble graph of bond maturity that China has. Now, it makes no sense between this area 12, 13, 14, 16. Maybe it's an old chart, I don't know. But if you look at this area here, the implication is, if it's accurate, I'm not saying it is, that QT, right, which restricts the flow of dollars and is really painful for these guys. It really hurts China. What happens when their bonds mature? They get dollars. What are they going to do with those dollars? Well, they may need those dollars for their economy because oil, because the dollar is still the store of value, the reserve currency. They may not. They may buy more gold. So this is, there are other charts to look at. Don't just look at this chart. But this chart shows a lot of expiration of bonds coming in 2019. Look at this. It's crazy. It's almost like a spirograph. And if you see the yields, you get an idea of how long ago they bought them. There are other charts, but this is the chart that's most compelling. But because it's dated, here's your caveat. Because it's dated, I wonder if this is a lesser concentration because this is an older chart. Now, I have newer charts that confirm that, but still, I don't trust it yet. Okay, this is yesterday, something that I wrote after having a conversation with Sunil. If we break above 1326 and back below, look for pressure to come in. That was my dream. The market spikes through the Fed, and then it comes off. Well, it hasn't come off yet. There's my team comment, and then below 1295 spot negates VBS momentum. All right, we can move on from that. That's actually old news. All right, today on a VBS radar, feel free to follow me on Twitter. I hope you have a thick political skin. I attack libertarians left and right for fun. I just don't like dogma. but why don't we put this so you can actually get some tradable levels today? All right, here's what I'm proud of because it's so far, it's so clean. All right, Apple, well, that's an hourly or monthly. Apple, we had a level on the daily to buy above this area. Market gaps in higher. You know what? How do you buy something like that? But it is Apple. And I've already made comments that I think Apple is changing their business model. I've talked about it with Larry on the AM roadmap several times. I think Apple, put it this way, my Aunt Aida asked me, she recently lost her husband, my uncle, and she's reshuffling her portfolio. And she said, what would you put your money in? And, as a trader, I answered, I said, if I had to put my money in something for 10 years and there were only two things, it would be Apple. This is even as it was cratering, and it would be gold. Now, gold is my bias. Apple is not. I hate Apple as much as everyone else. But I smell smartness in when they did what they did. I don't think there's an accident there. Get ready. You'll be wearing Apple goggles soon. And that iPhone that they talk about in Futurama is going to be the real deal. So I'm pretty proud of this. The exit, that's the stop loss. Okay, the exit, the entry was in the 160 area, and we were risking 161 area. We're risking 2, we're risking 1.5 to make 3. I'm going to let this go. Because frankly, I did do this trade in my aunt's portfolio. And I said, look, don't get out. So if it goes bad, it's her money she's losing. But this trade I'm listing for you guys because I told her I think this is really something good to do. It's a good time to enter. And if it gets below 158 and change, all bets are off as a trade. But fundamentally, I still like it. Also on the list, Linda Raschke alerted me to this. And I've run away from the grains. Over the years, my system did not work on them, but this chart's not to scale. But I want you to see something. You can't really see this properly, but corn is pretty freaking tight right now based on historical levels. If I stretch this out, you'd see it, but I want you to be able to take all these other levels. And corn should be on your radar, although I don't know what that means when the next month comes. It's a seasonal product. I know nat gas like the back of my hand seasonally. Don't know the grains. I know soy, but I'm not familiar with corn. But there's your levels for corn. Below and above, pay attention. There's a trade there. The other thing that I like to draw your attention to and why you need to understand the difference between futures and cash is I have an alert in Bitcoin. And we've been talking about Bitcoin for a while, but here's Bitcoin Cash. My alert went off last night. Bitcoin Cash says, see this here? This is insane. Now, I have nothing that I've done yet, but it's so on my radar. When this widens in opposite directions, I'm going with it. But that's cash, right? So cash is giving me a great risk reward here. If you go to futures, the risk reward ain't so great. And that's the problem with using futures for me, continuous expiration, et cetera, et cetera. But anyway, Bitcoin is on my radar. If I get a cash signal, I'm going to express it in futures. We're really close. The Bitcoin level basically is 34.59 on a daily close. We actually touched it last night. My alarm went off and then the market went lower. Now, we don't have much time left, but I want to talk about a couple changes that are coming to the gold fix. And net, I think they're going to be great. After today, the gold fix will be changing venues and hosting. Now, the opportunistic trader audience will have access as always. Nothing has changed there. We're not, adding some charge. There's no secrets here. And let me explain why we're doing this. I'm ready. I aim to expand the reach of this and other forms of content to a wider audience that will also be available to Opportunistic Trader. The goal is to draw a wider, more inclusive circle for those who want to learn. Access will remain free to all. The aim is to have a cleaner, more interactive experience for those who tune in. Who knows? I may even show my face. Content additions available to OpTrader people and the public at large will also include live classroom lectures in which the head of finance at UConn and I will discuss commodities, options, and capital markets in front of students. I'm very excited about this, while simulcasting to the OpTrader audience and the public at large. It's called blended learning. Look it up. And it's the future of all education. We'll be using Periscope, Zoom, Skype, whatever. The medium doesn't matter, folks. It's the content. And if you have content, make sure people can see it. There will be more content as well. By more, I mean Michael Moore. Michael Moore called me and said he wants a retail product. Finally, hallelujah. And I'll be working together with him, and hopefully we can bring that content to OpTrader. But I do know that I'm helping him develop a site on that in good faith. He's going to create a retail version of his analysis, which, by the way, is better in energy than it is in gold. Secondly, there are projects that I need to focus on. One is a directional gold fund. I'll be self-seeding that will use the VBS tools mentioned here. The other is another project on energy, hedging cost of carry or mitigating cost of carry. A second paper that I've completed on carbon is done. Now we're moving on to another paper with Dr. Bob at UConn. And that paper, he approached me with the concept of mitigating cost of carry. And my response was, and you can imagine, if you know me enough, my response was, and I'm censoring this, my response was, let me read this. I hope you're right, because we can arb the crap out of oil ETFs if you are. And if the paper is right, if the thesis turns out right, the goal is to start an energy term structure arbitrage hedge fund using options. And you know I want to trade options again. This is the type of stuff I live for. Those who know me understand I like to diversify. I like to own diversified 5 delta calls. It's a strategy, and pivot to the one that hits. I encourage everyone to understand that the intellectual capital that you have, whether you be content provider, owner, or subscriber, that makes you a trader is applicable in so many areas. Participate in the OpTrader chat room. You know, making money is easy if that's all you want to do. But my goal is to do more. I am grateful for the time spent on Opportunistic Trader and for the subscribers and content providers who added to the experience. I learned as much as I taught, and I'm not going anywhere, and I hope you aren't either. It's 7:20. I'm sorry, it's 20. My clock is still in the middle of the Atlantic Ocean. My connection is unstable, apparently. Okay, well, maybe I need to pay my bill. Anyway, you can follow me on Twitter. You can see me in the chat room, and you can email me if you have questions. All right? Have a great day. This is Vince Lanci. Stay tuned for the AM Roadmap.